Well, good morning, everybody. This is Jeffrey Hare. It's a couple minutes after the top of the hour, and we're going to go ahead and get started on this topic this morning. See, a few folks are still getting signed in, but we got a good group already signed in, and hopefully this will be a good topic and presentation for everybody. I'd like to make this as interactive as possible. That was the goal of Doug as he talked about this presentation, is to interact with you guys on give you an overview of how auditors look at segregation of duties and access control risks in general, but also make it very interactive and talk specifically through some of the challenges you guys have had as organizations and as individuals, and how we can possibly solve those. So my recommendation or my request is just use this questions box throughout the presentation. I will attempt, as questions comes in, to have to open the mute line or unmute you as an individual and have some dialogue on each topic. We'll probably save most of that towards the end of the presentation, but if there's a particular topic that you guys want me to stop on or you want to have some discussion on, we certainly can do that during the presentation, just to make this as interactive as possible. So with that in mind, I think we're going to get started and leave as much time as we can for Q&A as we go throughout the presentation at the end. I've kind of borrowed this topic from a webinar I did a couple of years ago, which we called Risk-Based Assessment of User Access Controls and Segregation of Duties. The goal really is for me to give you some background information about the types of projects we do, what we see in the projects, how we address issues as it relates to segregation duties and access controls, and then certainly allow the interaction as much on specific topics that you guys want to talk about. So hopefully my audio was good. I'm getting some comments on the audio quality or the timing of this internet connection may not be good. So I'm at a client location. If you guys can't hear me or having problems, with the slides moving, please use the chat window or the questions window to notify me of what's going on. So thanks, Jerry, for the feedback. Sounds good so far. Good. So I'll get moving, and we'll see how long we have for Q&A. So from a logistics perspective, just for those that haven't used the GoToWebinar format, you can hide and unhand this panel on the right-hand side via that little button that moves it in and out. Use the questions window for questions throughout the presentation, and then we'll, like I said, try to review some of these maybe during the presentation and towards the end if we don't get to them during the presentation. So the agenda today, just briefly introduce myself, so a little bit of background about where I've been and how this relates to the topic. I'm going to talk about how audit firms and organizations address segregation of duties. So I talk about deficiencies in current approaches to SOD, and then how we address these type of things. And hopefully through this, you'll have a better understanding of how to interact with your auditors and management on access control issues, to kind of the balance between operational effectiveness and needing what you have to see the applications and perform your job duties, as opposed to adhering to strict audit requirements. So hopefully we'll be able to strike that balance today. So now this is an old slide. So I am the founder of ERP Risk Advisors. We used to be branded as ERP Seminars a couple of years ago. I am the author of the only book in the space on application security best practices. So Oracle e-Business Suite Controls, Application Security Best Practices, have been published in a lot of different formats. I've been a contributing author to another book here. I've been published by CISA, which is the controlling organization for the CISA designation, which I'll talk about in a second. A lot by OEUG, Insight Magazine, for those of you that are OEUG members. There's actually another article coming out this month that I wrote, and I'm very excited about it. My background, I have a Big Four background as an internal audit firm. External auditors. I started my career in public accounting and did financial statement audits, those type of things, and then got into industry. We're in CFO and control roles for about 6.5 years. So I ran the audit from a client perspective, and then I've really been in the e-business suite space since around '98. First as a client, and then for the last 10 or 11 years, I guess, as a consultant. Really have been focusing my personal career and then the business I started, ERP Risk Advisors, on security controls related to Oracle e-Business Suite. So we do a lot of security implementations, that application security, role design, those type of things. A lot of controls implementations, before, during, and after implementation, upgrade controls, implementation controls during the original implementation. So we have a very focused market in that we focus solely on internal controls and security. So I'm a CPA by trade. Managed a lot of the departments, cost accounting and payables and receivables and all those type of things in my role as a CFO and controller. But I also have 2 other audit designations: Certified Information Systems Auditor, CISA, and Certified Internal Auditor. I picked those up 5 or 6 years ago, so I understand the internal audit process very well. Do a lot of consulting and training for internal auditors. So depending upon where you're at, it can be a good thing or a bad thing. So that's a little bit about myself. What I kind of fathered the whole concept of user access control, or the approach to risk-based risk assessment processes related to user access controls. A lot of people early on in the SOX cycle, if you will, that we're looking at access controls. We're focusing solely on segregation of duties risks. And so as we'll look at some examples, segregation of duties are important, but in some cases it's not the only risk you should be looking at. So we've kind of expanded the discussion in the industry to look beyond typical SOD risks at looking at access to sensitive functions within the application, which means there are some single function high risk access that you need to be aware of, and I'll give some examples as we go throughout this presentation. So single function risks that have specific risk within the application, and then in some cases you have a high risk function within the application that is combined with a process that happens outside the system that becomes a segregation duties risk. So when you're looking at segregation duties, it's not just what happens within the system. Sometimes it happens in combination with activities that happen outside the system that cause a segregation duties risk. So our approach has taken that into consideration. And the last topic here, from the rounding out the 3 legs of the stool, access to sensitive data. So hopefully we'll go through some examples so you'll understand what those 3 things are in more detail. The risk assessment process that we perform when we're doing either just a pure security implementation, so trying to understand what roles need to be designed or how roles need to be designed, or sometimes we do a risk assessment in conjunction with implementation, like an most people think of as an SOD tool, like a CS Comply or a AACG or a SODVM product. Those are the couple products we're most familiar with. The risk assessment process really says what rules do we put in place when we get to the tool implementation. But we do this risk assessment process either during an upgrade or during implementation for role design, because it ultimately feeds back to how should functions or business processes be designed within roles, and how should they be segregated, and what controls should be in place. From a risk assessment perspective, sometimes you have functions. As some example here is functions that should be allowed by a certain user or a certain user group, and then you have certain functions or SOD violations that shouldn't be allowed by anybody, so it should always be prohibited. So a couple of examples here: single function risk would be something where it would be used with user exception. So there are approved users that have the ability to access something like defining average cost forms or standard costs, or in this case menus as an example. So you have certain users that are authorized to do that, but if other users that weren't authorized to make those changes got access to that form, it would become a problem, or it could become a SOD violation. And then there are certain single function forms within the application that shouldn't be used by anybody. And an example I always say is quality plans or collection plans in the quality module. is a form that something we call SQL forms, a form that allows a SQL statement and an OS script to be embedded in them and be executed within them. If you're not using the quality module, then that would be a function or a form that should never be allowed in your environment. So from a security perspective, we'd make sure that wouldn't be contained in a role, and we may put some controls around monitoring any activity or somebody was to get access to that. So those are two scenarios of single function risk. You have kind of a similar concept with an SOD. There are cases where you may allow a user to have access to two functions together, two business processes together. With a user exception, there are cases where you'd say under no circumstances should a user ever have access to SOD, these two business processes or functions within the application. So a little bit of background on how we evaluate risk in the environment. So what I kind of wanted to talk about today, we're going through this list of deficiencies because rather than focusing on what could go wrong, I'm trying to help you focus more on what typically goes wrong in designing roles in an application. So we're kind of focusing more on the practical as opposed to the what is. And Jerry just asked a question here, what if we're using the quality module? Are there ways to control this access? So specifically to the quality plans comment, yes, there would be ways to control the access. So if you didn't have a tool, the first thing you'd want to do is make sure that you understood who had access to that module or that particular form. So your role design is really important, and you can certainly control what roles have access to it. You should be able to know what menu or submenus that particular function or form is contained in, and then to the extent that you have a user or a group of users that have a business need to define a collection plan or a quality plan, it would be defined within their role. So that would be your primary way is controlling who has access to it. The secondary control you want to do is potentially look at what they're doing within that form. So this is an example of a form that has a high level of risk in that an end user with access to this access to the form could embed a SQL statement in it that it has no limits to the SQL statement. For you guys that know the technical architecture of the application, you know that the application connects to the database through the apps account. So what that means is the privileges in this form, the collections plan form, a user has the ability to execute a SQL statement or an OS script, but talking about a SQL statement through the database log as if they were the app's user. So this is one of those risks and scenarios, frankly, a lot of organizations don't understand and don't have proper access controls and monitoring on. So for those that have proper access controls, they still have the ability to make changes through the form or execute statements through the form that would not be approved. So those are things that would be approved or they would have a valid business purpose you wouldn't be concerned about. It's where the risk really comes down to them, like say, for example, resetting the sysadmin password or making a change to a bank account in the HR tables or the supplier tables where you have people being paid via direct deposit or ACH. So what you'd want to do is put some monitoring in place, and our preferred mechanism from a technology perspective is the use of triggers. We can talk offline pros and cons of triggers, but we like to use triggers in these cases, and there's a few tools in the marketplace that have trigger-based auditing solutions. And what we would do is deploy a trigger on those tables, have an alerting mechanism that would identify whenever a change is being made to those tables and would alert somebody that's responsible for overseeing, maybe a quality manager that's overseeing somebody that is doing the collection plans, or also maybe somebody in IT that would be responsible for overseeing your change management process. So from a procedural perspective, if I kind of had to recap the issue, we'd lock down controls to those that are just authorized to make changes. We would require that any changes through that particular form goes through the change management process, which would mean whoever has access to that form would have to say, I'm making a change, and have to go through testing. If there was a particular SQL statement, if they were using the SQL statement functionality, the OS script functionality, they would actually have to build that script into the change management documentation. said, I'm doing this. It's this specifically online. This is the intent of what I'm doing. You should have somebody independent of them do a peer review of the SQL statement as an example to make sure that it was appropriate. It's not going to cause performance issues within the application. Typical SDLC type things, and then you would have a trigger-based auditing solution monitor the activity through that, and then whoever's doing your change management, quality assurance, or management testing would look at the data that was generated from the system-based audit trail using this trigger, and they would then trace that back to the change management process to make sure that the change was as expected once that change was executed in your production environment. Great question, Jerry. This is actually a topic that I think a lot of organizations underestimate and don't understand the risks well. There's a few forms. The Define Alerts form is another great example of the same level of risk that allow SQL statements to be embedded in them. And then there's about 35 forms in total that allow SQL statements to be embedded in them. Sometimes it's just updating of a where clause, but at the table level behind the scenes, we like to put audits on all these tables just to make sure that we're controlling access or monitoring what's happening through them. Even if we don't expect that somebody has access to those, if somebody could get access to those through a variety of different ways, or could have a database login. If you don't have your database hardened, that would give them access to those tables and to be able to execute a SQL statement or give them privileges beyond where they get just normally through a database login to maybe other schemas within the application. So a long answer to your question. Hopefully you're looking for the long answer, not the short answer, but it sounds like you said thanks. So I have good feedback hopefully on that, and we can certainly talk about that offline if you guys want to explore that topic, or if you got follow-up questions on that. If anybody else has any follow-up questions, please just use the questions box. So back to deficiencies and current approaches to SOD projects. The most common thing that I've seen really is kind of relying upon seeded content of software providers, or relying on seeded content of an audit firm. So you guys have probably come in and you've had your big four audit firm come in and they run their tool against your applications, and they come out with all kinds of SOD conflicts and risks. And what often happens is they're taking a shotgun approach as opposed to a targeted approach. So they just throw out these rules. They run this massive rule set without any understanding of your environment, and they come back and say, how are you mitigating all these risks, or do you understand that everybody has, you have 1,000 users with 100,000 SOD conflicts. So that can be a very frustrating experience, and I don't really have an answer for you on how to make that a better process when you're dealing with an external provider like an external audit firm, or someone that does your outsource internal audit, or maybe you have your internal auditors take that approach. The right approach, as we get into this next topic, is a risk-based approach in defining the rules down to what's relevant to your organization. So we're going to talk about that in the next couple slides. Second topic, you're not taking a risk-based approach, considering current controls and defining what a risk for your company. The shotgun approach inherently does that, not considering all user access control risk, and taking into consideration access to sensitive functions and sensitive data. For the longest time, when we got brought into organizations that had, let's say we're helping them respond to auditors, and they've got this population of 100,000 conflicts, or maybe even 5,000 conflicts that auditors are saying, you need to explain these things to us. When we were looking at the rule set that the auditors were using, primarily they were always looking at quote-unquote SOD risks. So one function or one form or one business process in conflict with a second one. And more often than not, when we were evaluating the access and the rules, what the intention of the auditors was under that scenario is they were looking at a particular high-risk function. So we saw a lot of audit programs or preceded content that would have a high-risk function in conflict with something that was totally irrelevant to it, and the risk they had associated was just the risk of the single function. Now I think they've evolved over the last couple of years to having a better rule set in some cases, but that still exists as a risk from an audit risk perspective when you're monitoring this, because not only do they not have the rules right, but oftentimes they can't delineate the risks related to those conflicts, whether it's single function risk or SOD conflicts. So we're going to talk about some ways to mitigate that in a couple slides here. And then the last topic is looking solely at SOX risks and ignoring fraud risk below the materiality level and other operational risks. So a lot of what we've done is develop methodology and content and assessments that are looking for things below the materiality level, so common fraud risks and other operational risks, which can be vary significantly from organization to organization. So just to give an understanding of how we approach this when we're looking at, what is the process for refining that risk population, the segregation duties risk and the single function risks, how should auditors be approaching this? That's the real question to give you an understanding. And to the extent that you see that auditors aren't doing this, you can push back, and I'll talk about, those methodologies. But how do we address this, and how should auditors be addressing access control type of analysis? Initially, you have a population of conflicts or risks. Identify access control conflicts or access control risks. So we have a risk library and a methodology we have on this. Every audit firm should have a similar thing. So that would look like, identifying inter-journals versus inter-journal authorization limits being a conflict, and the risk associated with that is if a user has access to both the ability to enter journals and enter journal authorization limits, they could override the controls in place by increasing their journal authorization limit, submitting a journal entry through a journals form, and then changing their authorization limit back. That would circumvent the controls related to definition of authorization limits. So that would be an example of an SOD conflict and a risk associated with it. You may also look at it as a single function risk, enter journal authorization limits. That in and of itself, if somebody makes a change, even if they don't have access to the enter journals form, if they make a change to authorization limits, and it's outside of policy, that is you could be circumventing the policy and potentially invalidating your application control. So that's how we would look at a single function risk and an SOD risk, and we would identify the risk associated with that. The next step in the process, once you have kind of an inherent risk of inherent a population of inherent risk, is to document mitigating controls. So let's say in my example, both the SOD example, the enter journals, enter authorization limits, and then the single function risk, enter authorization limits, you may have a change management policy that says all changes to authorization limits have to go through a change management process. They have to be approved by somebody that's familiar with the policy related to management policy or board policy that says these are the various levels of the organization that can have a $100,000 limit versus a $500,000 limit. And then on top of just having a change management process, you may also have a QA process that is in place using a trigger-based auditing solution that somebody can go through and make sure that all changes made to the system were actually made through the change management process and properly proven and documented. So those would be some examples of mitigating controls that you'd identify that you would allow you to assess the residual risk. So the residual risk then is what is the risk inherent, or what's the risk remaining after you take into account the mitigating controls. So if you had a strong change management process and a QA process, the risk is going to be fairly minimal depending upon the quality and the timing of that process. The design risk of the control is going to be minimal. You always have operating risk of controls, but so you would more than likely say that we have good controls around that place. If you've got a good change management process, then maybe I'm and that change management process is well trained and it happens on a regular basis, and you have a high degree of confidence. You may not be quite as concerned about somebody having access to enter journals and journal authorization limits in a production environment. There's still some remaining risk, but the remaining risk may be fairly minimal. So assessing this residual risk, ultimately discussing those residual risks with management, getting management to assume whatever the residual risk is, or if they don't assume it, then have a remediation plan for putting some additional controls in place. documenting remediation steps for unmitigated risks, and then ultimately this can come down to, do I identify this as a conflict? Am I really that concerned about somebody that has the ability to enter journals and enter authorization limits? If the residual risk is, yeah, I still don't want that to happen, then maybe that becomes a requirement for an SOD monitoring tool. We put either a detective control or a preventive control in place, depending upon the software, and again, depending upon how stringent management wants to be monitoring those access control risks. So that's the process we go through. What comes out of this process, this risk assessment process, just from giving an understanding of what we typically do. It may be that you have a requirement then for an SOD monitoring tool. You may have some requirements for a trigger-based audit trail. You may put some monitoring reports or alerts in place. You may decide in some cases that you need to personalize forms because there's intra-form issues. You may have to customize workflows or use workflows to enhance the controls. You may decide that you have some process changes or control changes. Maybe you don't have a strong configuration change management process, or it's not well defined what configuration should go through change control versus those that aren't subject to change control. So that may be a process change, that may be a definition control change. You may decide that there are some risks that that don't rise to the level of SOX controls. So you have some non-key or some standard controls that you want to document and start testing on a regular basis, but maybe they're fraud, minimal fraud risks or minimal operation risks that don't require SOX testing, but you want to do some testing because it's important to maintain integrity of your inventory balances or prevent fraud in your organization. And then certainly what things that come out of that, access control or security changes, those type of things that you'd expect. So I think this is the slide I really wanted to get to, which is, how do you respond to auditors when they come in and they drop this huge list of conflicts that they deem as conflicts in your lap, and you're set there with a massive task of trying to defend access to how you define roles. And in a short window of time with everything you have going on. And so here's kind of my synopsis for you. First and foremost, you have to banter back and forth with them on what risk is. So they'll come back and they may say, this is a particular conflict is a high risk function or high risk conflict. Well, then your challenge really is to discuss them. What really is the risk related to that particular SOD violation? And frankly, the biggest challenge you have is not your understanding of the risk, it's your training of them on what the understanding of the risk is, because often you're dealing with a generalist related to IT controls and not necessarily somebody that understands EBS in detail, or you're dealing with somebody with I hate to say it, but a 20-something kid that's come out of college, which I was one at one point, so I can speak with authority on this, that isn't really trained to know risk and understand it. They're just following an audit plan. So I can't help you around that. You're going to have ignorant auditors coming in, and you're going to have to train them and banter back and forth with them. What I suggest on an ongoing basis is not to have the exact same conversation every year, or every quarter, or every 6 months, or however they're testing however often they're testing your controls. What you need to do is document internally on a spreadsheet, kind of similar to what we do, is saying, auditors are saying these are risks. You need to document what internal controls you have in place to mitigate those risks. And what I would suggest doing is do that once this year, and as time goes on, you build up a population of information in spreadsheets that you've identified specific mitigating controls you have in place that you feel sufficiently mitigates the risk. So as opposed to having this long discussion with them when they come in and run these, these overburdensome SOD tools, you hand them the spreadsheet and you say, we've talked about these issues in prior years. We've agreed that these are the mitigating controls that are sufficient to mitigate these risks. Come back to me with a population that is something different than what we've talked about in the past. If it's something new, it's something we don't have documented, I'm happy to address it. But otherwise, you say I'm not going to mitigate or pare down this list for you. Have them pare down the list of what the things are that are remaining. So that's the primary advice I have: is do your own risk assessment process internally, or hire us or somebody else to do this documentation process for you. Maintain that on an ongoing basis. Make sure it's out there in a shared drive, so whoever's responding to this in future years knows where that is. And force the issue back to the auditor to narrow it down to what are the real risks inherent in my system. And then on those, you have to have the ongoing discussion. If there's new rules they have, or if it's a new audit firm with a different library of risks that they're evaluating, you may have to start over. But in some cases, a lot of the common risks, some of them are common between the audit firms. So the other thing, when it comes down to it, most auditors from a SOX auditors are always looking at material risk. If you're dealing with internal auditors, this is another topic, but when you're dealing with SOX auditors, sometimes the risk isn't something specific to that process, but are either what are called entity level controls, or maybe even non-key controls that you're relying upon. From SOX perspective, you really need to be giving them key controls that you're relying upon. But let's talk SOX risk, then we can talk about non-SOX risk. So here's some examples of entity level controls or financial close controls or other controls that are common for most organizations. So things like entity level controls, like journals are reviewed and approved. You have financial close processes. That means a lot of different things to a lot of different organizations, since organizations have different business models and different financial close processes. The more common things that I would see are like budget to actual analysis. Even if there was a fat finger to a cost for average cost or standard cost, it's going to get identified via variance analysis, purchase price variance, invoice price variance, or budget and actual analysis, or forecast to actual, or plan to actual analysis. That's part of your financial close process, or if you have a weekly soft close, or you've got weekly processes to analyze inventory balances and inventory differences. Those are all things, you guys, if you're cost accountants, those processes well. And even if they come in and say, somebody has the ability to enter a transaction, and they have the ability to maintain average costs or standard costs, as an example, that's a conflict of interest. You say, well, there may be an inherent risk in that process, but we have a PPV process that would capture any significant differences. So while that may be an inherent risk, we have defined controls related to that risk. The residual risk to that process is minimal because we have proper controls in place. So here's just some examples. Your organization will come up with your own based upon your control library. Again, what you need to do is, if they come in and they hand you this risk population, is to have that spreadsheet where you've done that evaluation of risk, you've documented the controls, and often you're dealing with controls that apply to a lot of risks. So what you might do, as opposed to documenting the control on each risk, is have a control library and cross-reference that to your risk population, so to speak. So common documentation with risk and controls libraries. We can certainly show you some examples of that, or work with you if you guys are doing some of the activities. So that's kind of how I would say, this is my 2-minute summary of how I would respond to unreasonable auditors and requests that come in. The other thing that I would look at, this last point here, is looking at evaluating your key controls. So most of the time, if we're dealing with auditors, we're dealing with SOX risk, we're dealing with key controls. When SOX first came out, you go back to 2003, 2004. There wasn't a lot of guidance on that. Everybody kind of calls SOX the full Employment Act for audit firms, which is what it was for a while, because they just came in and just documented and over-documented controls and processes, and I think a lot of that still is residual in firms. that there's a lot of key controls that are defined that are really unnecessary when you're looking at risks related to material misstatement of financial statements. To rise to the level of materiality, it's got to be a fairly significant problem in your organization. So a lot of those entity level controls, that I gave examples of here, those are things that if they're designed well and working well, a lot of the controls that are within each modules oftentimes are unnecessary. And I'll just give you an example. Client I'm at right now, they've got like 35 controls related to payroll, HR payroll activities, and I'm recommending that be dropped to one control within the HR payroll department, which is the reconciliation of pay activity to the GL or to the general ledger activity. Everything else that happens, the posting of the journal entry, everything that happens in the financial close process, the posting of the journal entry, for example, from payroll to GL, the budget to actual analysis, flux analysis, account reconciliations, all those entity level controls that happen as part of the financial close process, I would make a strong argument most organizations would mitigate any material risk of misstatement that would come out of payroll. So if there was a fraud risk, as an example, of hiring an employee or making an unauthorized, hiring a ghost employee or making an unauthorized change to a salary amount, or making an unauthorized change to direct deposit or benefits, values or whatever, none of those would rise to the level of material. If you make a change, if you fat finger an issue, back to my average cost or standard cost, you fat finger standard cost, and it's $1,000 as opposed to $100, that's going to get caught in what we define as entity level controls. There's no reason to scrutinize every data entry element for cost accounting at the detail level. Those shouldn't be key controls from the SOX perspective. So go back to the bottom thing. I think that the other hopefully takeaway is go back and review your key controls if you're in the position to do that, and rely upon those non-key controls and reduce your audit scope so your auditors aren't coming in and looking at certain SOD risks and those type of things. Hopefully that makes sense. If you got any questions along those lines, let me know. So I threw in a slide here on, since I'm assuming a lot of your organizations are upgrading to R12, either in the process of doing that. So I threw some recommendations here. Some of these are more operational in nature as opposed to control-oriented. So the first one is taking advantage of multi-org access control, or MOAC. When you go to R12 to access data across operating units, across inventory orgs, the security model 11I doesn't allow you to see data across operating units. So that whole multi-org access control in R12, you could really dramatically decrease the number of responsibilities that either as a cost accounting manager or an inventory manager you're having to use, increase your productivity and effectiveness. Use query only equals yes to generate inquiry only forms. So the forms based, as opposed to the OA framework, the professional forms based activity within the application. One of the comments that Douglas made to me was, access being taken away to things for cost accounting managers, and they're not even given access to inquiry, into certain elements of the application or certain data. More often than not, there's ability to build a custom function that becomes inquiry only. Now, Oracle has to have, from a development methodology, they have to build this into the forms, and there have been cases where they haven't followed their own development methodology, and so this query only equals yes doesn't work in all forms. But I would say 98% of the time I've seen it work, and if you have a form that is update and you want to make it inquiry only, you can develop a custom function, and that will give you or others access to an inquiry access to a form where perhaps that's being tried to be taken away from you altogether in production. Having inquiry access is better than nothing. Third bullet here, refreshing production and non-production instances. So if you have an application support instance or a QA instance, try to have that being done on a more regular basis, so that the data is more fresh for you to be able to work in a non-production environment. And oftentimes you'll get the ability to work in a non-production environment with more liberal access for replication of issues and troubleshooting. And then the fourth recommendation is use of a trigger-based auditing solution to generate detailed audit trails for changes to key control configurations, critical changes to item master. This is probably one of the monikers or titles I've given myself over the year is audit trail evangelist, and this is one of the areas of deficiency that I see most organizations still haven't fully grasped or stepped up to handle in their organization, which is 98% or 99% of the application doesn't have a before or after value detailed audit trail being generated for changes. And there's a lot of reasons why you want to have that change history. Certainly if you're dealing with application controls for SOX purposes, auditing standard 5, if you're familiar with that, requires strict controls over configurations related to key controls. There's a lot of reasons to do this for operational purposes, to have audit trail. If something gets messed up, you can go back and see what the value was before, see who made the change, just to make sure that you're well aware of who's following processes and who's not following processes, or whether they're formal change management processes or things that aren't subject to change management that are still important. And so we typically deploy a trigger-based auditing solution, and I think every organization that runs EBS should have something in place. There's no organization that shouldn't have at least 50 or 60 tables they're auditing at a minimum, and in most cases we recommend well over 100 tables when we get through that risk assessment and see what you're using, what applications you're using, what controls you have in place. Usually ends up being a fairly big population of tables. So if you're planning your R12 upgrade process, I would recommend looking at some of the tools in the marketplace for trigger-based auditing solutions. SOD tools would be another one. We implement some non-Oracle products from CISA and Absolute Technologies, primarily on the SOD side, and the SOD user access control tools can be fairly cost-effective, easy to implement. A lot of them can be implemented manually. So I think that's a low-cost impact that you can have during your upgrade process to be able to have better monitoring of access controls, SOD issues, and single function risks, as well as putting a trigger-based auditing solution. So I'm going to try to recap here. I'm going to just fly through these slides, and I'll send these slides to you guys that attended today's webinar as for you to refer to. There's some resources here. My book as a resource, and now would be a good time to pose any questions in the questions box as I'm recapping this, and I get to the end here in a minute, and I'll open the lines up or try to address any other questions you guys have. Some links. We have a bunch of recorded webinars we've done on security controls topics over the last 3 or 4 or 5 years. Some of them are still branded ERP seminars, but we rebranded it a couple years back. So my YouTube account is still an ERP seminars branded one because you can't change the name, unfortunately. So I've done some video blogs, and there's some blogs that if you want to follow the activity I do. A couple Yahoo-based groups. If you are a end user, this internal controls, internal controls security and list server is a public open group where you can interact on security controls issues. There's another closed group that we have for end users only. We call it Internal Controls Repository, where we put some information out there to automate controls. In some cases, there's specs on things. There's sample policies and procedures. There's a variety of different things in that group. There's the ICR link. There's a couple LinkedIn groups that we also host, the Oracle GRC group and the Oracle ERP Auditors group, so if you're interested in either one of those. We offer a variety of services from a security controls perspective, from a very comprehensive project audit / QA process. We do security upgrades and implementations during either upgrade or during implementation process. Same with controls. implementing controls during your implementation, upgrading controls during your upgrade. We offer software implementations for security controls monitoring, SOD things, type monitoring things, type software, building system-based audit trails, implementation of trigger-based auditing solutions. We do a lot of consulting on change management policies and procedures for organizations when they either during or after implementations and upgrades. I think I've talked about these. Data security software is another thing that we do. There's a variety of different companies that we use to implement finer access controls over data security. And Q&A, let's see, there's some other services there. I'm going to go through that and just get to my my contact information slide. So let's see what we have from group. So I'm not getting any more questions from the group. Come on, guys, you can think of some questions. Certainly you wanted something covered today that I didn't cover, and we definitely have a few minutes to address those. So I'll wait for a second here. Come on, guys, think of something good. Stump the expert here. I will just say, hopefully you guys are thinking about this or typing some questions in. My contact information is here. If you guys get into issues and troubles during an audit and you want to bounce an idea off me, certainly feel free to send me an email. I do a lot of responding. In some cases, if it's a longer conversation, we can get on a quick call. I always say first hour is always going to be free. I do a lot of consulting with people to see if it's a real issue or not, helping you respond to minor issues with auditors, both external and internal auditors. So I understand their mentality well and can help you get to a reasonable solution or help you respond to those things without a lot of feedback, without a lot of time committed on my side. So Jerry, question, would you say that most companies are too restrictive or too open on roles and responsibilities? That's a good question. I would say the answer is both or neither. When I come in and evaluate role design, more often than not, to be honest, I see that they're too open in the roles and responsibilities. Primarily because most organizations, they have a system integrator that has done the role design or responsibility design to begin with. And my experience has been that most system integrators don't design things well from an internal controls perspective. And it's not that in the way I take role design, my goal is never to be too restrictive. So if you understand the concept of role-based access control, you want security to be as open as necessary for somebody to get their job done. That's the primary principle. But you also want to make sure that they don't have access to anything that is not within their job duties or functions. And more often than not, what I see is an excessive use of top-level menus and submenus, seated menus and seated submenus in the design of security that gives users access to forms that they have no reason to have. It may be setup forms, it may be configuration forms, it may be master data. So I guess I would argue that more often than not, the access is too open, but I'm also very cognizant of the fact that that for end users, there's access being taken away from them, and there aren't alternatives given to them to be able to do their job. And part of that is ignorance on the part of auditors and security people, in that, like, for example, they don't know that you can do a custom function for a form, or they don't know that an inquiry form exists. And part of that, frankly, is just poor security design by Oracle that, in some cases, Oracle doesn't offer inquiry access forms. So I guess that's my comment on that. Question for Jerry: how would you structure the need for temporary or one-time access needed when you add a new org, for example, but otherwise not needed. Good question. So the way, from a risk assessment perspective, I say temporary access is the same access in the long run as permanent access. In that, if you have somebody you're giving somebody access to something on a temporary access, you have the same risk as if, an unauthorized change, which is your primary risk. You have the same risk as if they have that form on an ongoing basis. So I step back and say, what are the risks inherent, for example, with access to set up a new org? So the way I would mitigate that risk, as an example, is say any new organization changes should go through a change management process, and you ultimately should have a QA process related to change management, so that whether that access is temporary or permanent, somebody's able to review what that person has done and make sure that that change was appropriate, authorized, blah, 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 right? So, which means ultimately you have a trigger-based auditing solution in place, which is the right solution to be able to pull a system-based audit trail. And then that way, whether their access is temporary or permanent, then you have a process in place to mitigate those risks. So, having said that, if you don't have a trigger-based auditing solution in place, the next best thing is to give temporary access, but only give them access to the form or forms that are necessary to make that change. So what I've seen done in those circumstances is maybe you have a permanent role. Let's say you're a cost manager. You have a cost manager role that you have in production all the time, and then you have a temporary role. That could be it could be defined as a IT support role, or it could be a temporary configuration role that gets assigned, but that role isn't the inventory seated user, or it's not receivables manager or purchasing manager that gives them access to everything. It's targeted to what that particular access is as at that point in time. In an ideal world, those roles are already pre-built. So you agree upon when somebody needs temporary access, what access they need, and then you give them that temporary access in a predefined role, and then you remove that access. Okay, so those are the solutions that I feel most comfortable giving you in response. So it really comes down to having well-defined roles and responsibilities, doing a risk assessment, saying what are the, if you're not using subledger architecture, for example, in R12 SLA, then you don't define a role that gives them access to SLA, the entire subledger menu. It's making those logical determinations when you're building roles and anticipating not only what your current requirements are, but future requirements. But I think that you'll agree with that. So hopefully that addresses that question. Any other questions? Otherwise, I think it's about time, and I'm going to let Douglas wrap up. And Douglas, are you on? I'm trying to give control over here. Let's see if we can figure this out. Hey, you're here. Is that you, Doug?
Can you hear me? Yeah.
Yeah, great.
All right. Thank you, everyone, for attending this session. I apologize for coming on a little late. I'm at another client this morning. I want to thank Jeff in particular. It took me quite some time to find you. This was an excellent presentation. Do pepper him with questions afterwards. Our next meeting, we don't have a meeting in December. Our next meeting is January 17th. We don't have the session outlined yet. In fact, we are preparing our 2012 schedule. So if you have topics you would like us to find speakers on or to prepare information for that can help you, please let us know. We're in the process of preparing our schedule over the next 3 or 4 weeks. So again, I thank you very much. We wish you happy Thanksgiving, happy holidays, Merry Christmas, and for those of us unfortunate to have a December year-end close, happy close. And we will return again on January 17th.
Thanks all, everybody, as well, and certainly feel free to contact me as changes happen, and have a great day.